Good evening, everybody. Welcome to our first session for the Level 3 Management Accounting Techniques unit. My name is Catherine. I'm one of the distance learning tutors here at First Intuition. And yeah, it's going to be my pleasure to walk you through task 1 on this unit and for the exam on this unit. So just as a brief introduction, in case you didn't already know, so the Management Accounting Techniques unit is brand new for the Q2022 qualification that AAT have just launched. And it overall encompasses not only costing methods and costing techniques, but it will also partially cover bits of spreadsheets knowledge as well, because these used to be assessed as 2 separate exams on the previous version of the syllabus. So tonight we're going to be having a look at task 1, which covers costing techniques. We'll look at things like inventory valuations, valuing for labour costs, looking at calculations for different things to do with overtime premiums, all that sort of thing. We've also got a little bit of a recap on things like high-low method and FIFO, LIFO, AVCO, all of those things. So we're going to have a look at that, and then we'll have a go at some questions. What I thought I would do first of all, though, because this is the first revision session we've done for this unit, I thought I'd talk a little bit briefly just before we get started about how the assessment itself is formed and what we've got in there. So this is quite a useful starting point. This exam is different to how it used to be when it was just a costing exam on its own under the previous syllabus. It's now combined and there were bits of spreadsheets in there, as I said. But the other thing that's different is that there's less tasks. There's only 6 tasks on here, as you can see. We're going to be looking at this one tonight, this costing techniques one. And there's quite a significant number of marks available for each task on this assessment. However, what I would say is that each task is broken down into smaller chunks. So it's not a case of, if you may be able to pick up marks in areas if you're maybe not familiar with everything on the task, but we want to try and make sure that you're familiar with everything. So generally the costing things are sticking with tasks 1 to 4, and then the spreadsheet stuff starts to come in like tasks 5 and 6. So you'll see those in future sessions. But yeah, it's chunky tasks on this one, 120 marks available on the assessment, and you've got a nice kind of 2.5 hours to get all of that done. It's quite a nice time frame for this exam, I think, even though it says that you've only got 1.25 minutes per mark, but a lot of the marks are quite you probably won't need that much time to gain them, as you will see as we work through the practice question for tonight on task 1. So we'll have a look at that, which we've got here. So as we said before, we're looking at costing techniques tonight. That's quite a broad term. It can, where's that come from? There we go. Yeah, there's a lot in there, and we're going to talk about some of the elements that may or may not come up as part of this, and that's another thing that makes the costing elements of this syllabus, and it was in the case of the previous syllabus, there's a lot of smaller topics that you will be assessed on, and some of them will come up and some of them won't. So we're going to have a look at quite a lot of this in depth in the task briefing, but we won't cover questions relating to all of these areas on the practice. It's just a case of what comes up, and then it might be the case that in your exam other things come up. It just depends. So we've got 24 marks, and where's my highlighter gone? There we go. You're looking at about 30 minutes to complete this task, so quite a decent chunk of time. It may take us a bit more than 30 minutes to get through it all today, because we're going to be talking about it first. So in terms of what we've got in terms of content, you might be asked to complete a cost card. One of the things you might be asked to do. So when we talk about a cost card, what we mean is like the standard cost information for a product. Yeah, so how much it might cost to I don't know, make one chair or one table, how much material, labour goes into that. What are our overhead costs that might need to be absorbed into that product? It just depends on what costing theme we will use, or costing type that we use. So yeah, could also be a service, you know, it could be a service business that you asked about. So yeah, it's about the costs for a single unit, and maybe you're given those costs or information relating to those costs. It might be, like say, you might get the materials per kilogram and a price per kilogram, and then you're told, you know, the product needs 5 kilograms of product per of raw materials per unit. So you've got to maybe do a little bit of multiplying and dividing to get those figures together. You might also be asked to calculate sections of this, so things like the prime cost. The prime cost, how we calculate that prime cost. What's the 2 elements in our prime cost? Remember. Yeah. So it's our total direct cost, but what have we got that makes those up? Remember? Don't worry if you can't. So what we're talking about there is our materials and our labour. So direct materials and direct labour, and those 2 added together. Thank you. Yeah, I've seen the answers coming on there. Sorry, I was very a bit too hasty. But yeah, so your direct materials and your direct labour. I'm just going to move that labour there so you can see it all in one. So yeah, it might also be that you're looking at marginal costing. So with marginal costing, we are not including any kind of fixed, any sort of overheads in there, non-production overheads is what I should say. But we would include our variable production costs in that. So anything that's like a fixed overhead, we wouldn't include in our marginal costing. Or it might be that you're asked to go the whole hog and you have to include absorption costs as well. And we're going to have a look at overhead absorption rate later on, which obviously forms part of absorption costing. So it could be that you're asked to fill in a cost card based on some of those principles, you know, obviously not all of them, but some of them. The other thing that you might be asked to do on a task like this is to look at different cost behaviour types, and this is always something that students really like. And generally, you know, it might be that you're asked to look at, you know, if you say this is cost behaviour, if we look at the high-low method, yeah, so it might be looking at cost behaviour, but that's what we would use if we've got a mixed or semi-variable cost. On this syllabus, it tends to be referred to as a mixed cost, but you might also know it as semi-variable. And what that means is it's a cost that's got a fixed element and then a variable element, and that variable element will increase or decrease depending on the rate of production. If we've got more units, then we've got more cost. And there's a really good step-by-step process to be able to calculate the components of the semi-variable cost. This is what we call the high-low method. Yeah, so this is one of those things that the more you practice it, the more it will stick in terms of the process of what you do. And yeah, it basically is just follow that process and you'll get the correct answer. But it's looking at the differences between the data that we've got, because we usually have a data at a high point and a low point of production, and the total costs that go with those, and then you can use those to work out the differences in cost and in units, and then you divide those 2 figures from each other, and then that will give you your variable bit. You can then put the where are we? You can then identify that fixed cost by filling in this bit that we will know. We'll have calculated that from step 2, so we put that in there, and then that'll give us, and the missing bit is our fixed bit, because we'll know what the total cost is from the data that we've given. Unfortunately, I haven't got a high-low method question as part of the task tonight, but I thought that's worth just mentioning, and you will get all of these notes in the mailing that goes out to you tomorrow, so you'll be able to have a look at that. And you know, it's always worth practicing those high-low method questions with those mixed costs. What we definitely will look at tonight is inventory valuation, which is a really common and a really nice way for them to test your knowledge on the different costing techniques, because we've got 3, well, Used to be 3, but used to be 3. We used to have, as I say, used to be FIFO, LIFO, but they used to also be, sorry, FIFO and AVCO, but they used to also be LIFO. You now only need to know that this exists as a method. You don't have to work out based on last in, first out. So because really it's not an accepted method of valuing inventory. So you need to know that it exists, but it's not really worth us telling you how to calculate inventory based on the last in, first out method, because it's not allowed under accounting regulations. So you used to have to know how to work it out, but they've decided that that is no longer necessary. So you are only going to need to know how to calculate for FIFO and AVCO. So FIFO is, as it says, it stands for first in, first out. What that means is that the oldest items that we've got in stock need to be sent out first. Yeah, so it helps us to get a really good sort of rolling churn, if you like, of inventory. The old stuff is going out and then the new stuff comes in, and then it kind of goes in a nice circle, and we're not having really old stock sitting at the back of our stock room or inventory room or whatever you want to call it, warehouse, that may then go out of stock and not be worth anything. So it can be quite a tricky one to work out. You've got to be methodical with it, but it's quite, I say, once you've got that methodicalness with it, it's a really nice one to do. And we'll look at a question linking to FIFO shortly. The other method that you need to know about is a little bit more difficult to kind of calculate in the first instance, but then it's once you've got that calculated, that average, it does make everything else a little bit more easily. And this is the AVCO method. Yeah, so we use this for products where it's difficult to identify what was the oldest and what was the newest. I don't know if you've come across this example, but something like fuel might be a really, really good example. I mean, fuel's been sand. Yeah, that's a really good one as well. Yeah, if you're putting something, basically any kind of liquid, I mean, you could say milk or yogurt or anything like that. If you're maybe storing something in a kind of a big vat or a big tub or big cylinders, whatever, and you're adding to it, when you then issue that material, whatever it would be, out, you know, how do you know which bit of the, say we use yogurt, how do you know whether you're using the oldest yogurt or the newest yogurt? You don't. It's just, you've probably just gone in and weighed out what you need and off you go. So because we can't accurately say, oh, we've used the oldest stuff first, because we don't know. At any point where we're going to be issuing out inventory into production, then we will take what's in stock, both the value and the quantity, and we'll do an average, and we'll look at how we do that. So we basically will do, let me just put it down here. So we'll basically do the cost divided by the items in stock, basically. So if we've got, I don't know, 500 kilos of 500 mils of yogurt, and that's valued at £2, we would divide the £2 by the 500 mil. Maybe that's a little bit small quantity for real world, but you know what I mean. So you're dividing the cost of what you've got in stock divided by the amount that you've got in stock, and that will give you an average sort of per milliliter or litre or whatever you're working in, and then you can use that to then value the millilitres, litres, kilograms, whatever that you've got, that you're issuing out into production. We'll have a look at AVCO in our practice question today, but again, I think, to be honest, compared to first in, first out, it's nicer. There's less kind of difficulty with it. So you may well be asked to complete an inventory record card under either FIFO or AVCO, but not LIFO. You will not be asked about LIFO under this syllabus because it is not an accepted method. So we will have a look at inventory valuation coming up. So other things that you may be asked to do, this is such a bulky task. There's so many different things that you could be asked. You may also be asked about our good friend, the economic order quantity calculation, which is one of those ones that you, it's just one of those memory test ones. Yeah. So you will be given the figures for C and D and H, and it's a case of putting it into the formula, but you will not be given the formula. So that's the tricky bit, remembering it. Someone that I used to teach with, they said that they remembered the formula, this bit in the formula, the 2CD over H. They used to remember it as 2 cotton chips. So it would be 2 C and D at the top and then the H from chips. So I think we probably need something different, something beginning with H underneath, but that was how they used to remember it. The other thing to just pick up is that you need to be able to square root. So you're looking, I don't know how easily you can see my calculator on the screen, but you want a calculator that's got a square root button on it. It will make your life so much easier for this question if you did get economic order quantity on this task 1. So yeah, again, another part of the syllabus that needs a bit of memory committing to it, and a bit of practice, but it won't be anything difficult. You won't get anything tricky for these numbers. They'll be whole numbers. The only thing that can sometimes trip students up is what they give you for the figure for H, is that sometimes they will give you a monthly figure. So if you've got a monthly figure instead, if you get a monthly figure given in the question, you just need to multiply by 12. Yeah, so just make sure that you're watching for that in the question, that you're looking at, is the figure that I've been given for H, is it an annual figure, or they've gone, oh, it's going to cost £500 for 1 month, and then you're having to multiply it up to get these are all annual figures that we work on. Yeah. Similarly with D, they may give you a monthly demand, and again, you've got to multiply it up. Yeah, for both of those. The other thing that you may be asked to do, and I think both for this and also for economic order quantity, they won't form huge parts of this task, but it may be sort of 1 or 2 mark questions relating to this, which are always handy marks to pick up if you can remember what you're doing with them. Is you may be asked about calculating figures for inventory control, and again, this is another memory exercise of making sure you know how to calculate, first of all, the reorder level. It's a really nice, important one, because then that will then be used for both the minimum and maximum inventory levels that you need to keep at each time. But again, these figures, apart from that reorder level, which you should be able to calculate, all the other figures about lead times and usage should be given to you. So again, it's just a case of plugging those figures into the formula, getting it on your calculator, and off you go. But again, I don't think there's going to be a huge section of your task on this that's going to be devoted to those areas. Inventory record cards and labour calculation will give you quite a lot of marks because it's a good kind of table they can give you. But some of these are kind of 1 and 2 mark questions which they may throw in there for you. The other thing that they might ask you to do on this task is looking at journals for cost accounting. This is the only kind of bit of double entry bookkeeping that you kind of get on costing, because we don't really like it as cost accountants. We like to keep with the numbers rather than the debits and the credits. So again, you might be asked to, oh, where's my highlighter gone? That's what I want. So you might be asked to record receipts of materials, or and then maybe moving it either paid for immediately or where we've got a credit period. We do different things, so you can see that. Let me do a different colour for that one. So you can see that where we're having to pay for it immediately, we're going to credit our bank account because we're going to reduce the amount in the bank immediately. Whereas if it's credit terms or we're not paying straight away, we're going to record it as a liability into our trade payables account or our payables ledger control account. Ledger control account. 3 terms that mean exactly the same thing. You may then need to also issue materials into the production process, and it's very much a case of, in each case, debit the account that the materials are going into and credit where it's coming out from. So if we're issuing materials from inventory to production, we'll take it out of inventory as a credit and put it into production as a debit. And on the flip side, if we're going to then return things back to inventory, say we took out, I don't know, 1,000 kilos of wood and we're going to use 900, we then have to send that 100 back into stock. So we're going to do the opposite of what we did for when we were issuing those raw materials. We're going to take it out of production as a credit, put it back into inventory as a debit. But that's probably about as in-depth as you're going to get on these. You may also be asked to do similar recording for labour and overheads. And again, this kind of feeds into the bookkeeping side of things, which you may or may not have studied already at this level. But again, it's very much sort of, we're recording the things going out and things coming in, going out as credits, coming in as debits. So if we're having to record our labour cost, we're looking at the money going out of the bank. So we're going to credit the bank, we're paying that money, and then we can show that we've sorted out the liability within wages control account. This is something that you will have potentially seen at level 2 as well, recording sort of payroll and wages calculations correctly, that we always use that wages control account, or wages and salaries control account, you may hear it as, and we're using that to show kind of the control account is where the liability sits. So when we've worked out how much money we're going to have to pay to our staff, and we're going to have to put some aside to go to HMRC and to the pension contribution, it all sits in wages control account, and then we feed it out to relevant different places. So we'll be kind of debiting the wages control account and crediting the bank to show that money going out to the bank for the amount we've paid for our staff. We then also may need to transfer how much that's cost basically out of wages control and into production. So we can either do that, and we can basically say we're going to credit wages control account to set up that liability, and we're going to debit the production account because that's recording the fact that that's a cost. Yeah, so that's for like the cost of the wages. Oh, I was hoping that was going to be blue, and I forgot I changed it to orange by accident. There we go. So that's like the wages cost, if you like. Yeah, because we've got to factor in the fact that our labour time costs something, and that cost has to go into the total value of the product, how much the making the product has cost us. We may also have to do a similar thing for the overheads to show payment of overheads out of the bank. We'll have to pay for our rent and our electricity and all those things, but then we can allocate any production specific overheads again into that production account as a debit. So again, recording that expense on that, but then it sets up the liability to production overhead, and then we would debit that production. So it kind of works that that's going to be step 1 in the process, and that's going to be step 2 in the process. Yeah, and it's the same thing with this one. We set up the cost of the labour, and then we'd actually pay it. So you can see that we've got like kind of it out of each other. The other thing that you might be asked to do, it's a very wide remit on this task, is you may be asked to calculate different labour costs or costs relating to labour, and we will have a question on this coming up. So we may be looking at kind of, there's 4 different elements here. So you're looking at mainly time-based costs, and a lot of us will be familiar with this from work. You know, you might be that you're paid a certain amount per hour, regardless of how productive you are in that hour. You know, it might be that you're working your socks off and you've not had a break and all that sort of thing, and you know, or it might be that you were not able to work as quickly as you were hoping because, I don't know, there was a machine breakdown or something like that, or the internet went down or whatever. Depends on what role you're working in, but most of us will understand about kind of time-based costs. You may also be asked about piecework, which is where you're paid kind of per item that you produce. I think a really good example of this, but usually it might be in like garment making clothes and things. You might be paid per dress that you make or something like that. But time-based and piecework, are kind of just general basic pay elements. Yeah, so we don't have to work above and beyond to get those necessarily. Piecework's a little bit different, but yeah, ideally with time-based labour costs, it's not dependent on kind of you work the hours that you're contracted to, and that's it. However, it's very, very common, and you will be asked about this, to calculate things to do with overtime. Yeah, this is one thing that can trip a lot of people up, is making sure that you're answering what they ask you for. Yeah, so if they ask you for that word premium, the overtime premium, what they want is just the basic bit. Yeah, you will often see that you will calculate the rate of all of the hours based on the basic pay, and then you will calculate the extra kind of cherry on the top, if you like, or the icing on the top, that was the overtime rate. So if we were paying overtime at time and a quarter, like we've got in this example, then the premium is just that extra quarter, because the time bit will go into basic pay. But that does all depend on what they ask you for. You're looking for that word. Yeah, so if it says in the table the overtime premium, it just wants the extra bit, and the basic rate bit will go into your basic pay calculation. But we'll have a look at a question that's to do with that in the questions in a bit. You will probably also be asked to calculate on a different kind of component, bonus payments relating to performance. Yeah, so it might be that you're asked about units that are produced in excess of a kind of minimum level. So it might be that, you know, if the team produces, I don't know, 2,000 units in a week, if they produce over that, they get a bonus based on the number of extra units that they've done, and that would be the bonus that they would get would be calculated as like a percentage of the basic pay rate or something like that. But again, we'll look at that in the question. The other thing that they can include here is the concept of equivalent units. Yep, so this is looking at, it might be that we've got some units that are 100% complete, ready to go, but then we might have some units that are, I don't know, half complete in relation to labour. So that half completeness would go towards the team's efficiency, I suppose, and whether they would then get that bonus. But you'll need to know about calculating equivalent units. So say that they've got, I don't know, 1,000 units that are 50% complete. That's the equivalent of 500 fully complete units, because they're 1,000 half complete units. We divide that by that 1,000 by 2, we get 500 complete units in effect, because if they spent the same time as doing 500 complete units, just that we've got lots that are half complete. Yeah, so it might be that we have to do that. The other thing we have to look at with labour costs is making that decision about whether the costs are direct or indirect. Yeah, so if it's a direct cost, we're talking about kind of production staff costs. The other thing that you have to weigh up is that overtime will be a direct cost if it's relating to production staff, regardless of whether it's basic rate or overtime. They're working in the production department. Their job is going towards making products or providing services. So even if it's overtime, it's a cost that is related to the direct function of business, i.e. making what we're making, that product or providing that service that causes the business to need to exist. Yeah. Yeah. So basically, if we any kind of overtime bit will be normal hours and will be a direct cost. However, if the premium bit will be an indirect cost, unless we can say that it's for a specific customer. Yeah, so if we can say, oh, we had to work 200 hours of overtime at time and a half, that half will be an indirect cost. But if it was for a particular customer, we can trace it to a particular order, we can then say it's a direct cost. That's quite a tricky thing to kind of get your head around. But yeah, it should be a direct cost if you can match it up to a particular job. Right. I've done a lot of talking, so I think it's time that we do some questions. So this is an example of task 1. Okay, I think we've got about 4 or 5 components. We've got part A, part B, part C, D, E, and F and G. We've got a lot of parts of this, and some of them are bigger than others. So the first thing that we're told is that we're working for a company called Gabriel Limited, and they've got an opening inventory of raw material KB39 on the 1st of May, as we've got in this partially completed record card. So during the month of May, we've got 4 transactions, and we've got some of that completed in the inventory record card. Let's see if I can get it all. Yeah, I can get it all on one. So we need to be filling in these cells that are shaded in green. Sorry, I'm just noticing that it says the audio's distorting. Is everybody else okay? Or is it me? We're good. Don't want to continue if you can't hear me. I can just do a quick sound test if that helps. I'm assuming that you can't hear me because no one said anything. We'll try again. Okay, excellent. I wonder if it's maybe me moving backwards and forwards. I'm using the microphone that's in my laptop, which is literally just right below me here. Right, okay, so we are going to be filling in the basically all these green cells in this record card. Now, we're told that we're going to be using the first in, first out basis for inventory valuation, but this is all internal. A lot of what we do in management accounting is internal, so this is not actually going to be going in our financial statements or anything. So we have to fill in the missing numbers. We're told partial information about a lot of these things. We're told partial information about the 2 receipts. We've got 2 lots of amounts coming in on the 7th of May and the 19th of May. And then we're going to have to basically at each stage fill in what our balance is, keep that on track, and also value our 2 issues that we've got. So we're issuing out to the production, I could say better. Right. Okay. So there's an easy way of going about tasks like this, and this is to start with the information that's easier to calculate, and then we can fill in the blanks. You can do this one of 2 ways. You could be methodical. You can start with the 1st of May and work down. You can look at the receipts first and then look at the issues, and then you can fill your balance out as you go. But I think sometimes it's better to keep going in kind of a methodical way. So I'm going to start by looking at this receipt on the 7th of May and see where that gives us in terms of balance. So it's quite a nice way to start. We're told that we've purchased 2,500 kilos, and that has cost us £3,250. Lovely, great start. But we don't know what our cost per kilo is. So how do we work that out? Oh, it's having a shout at me now. Oh, come on. Oh, wonderful. Excellent. Just bear with me. It's having a bit of a nightmare. Where's my recording? So how do we calculate? Oh, my chat box has now disappeared. Thank you. Lovely. Yes, we're getting that right. Cost. Yeah, because basically what we can do is we can take our total cost and divide it by the quantity. So if I do 3,250 divided by 2,500, I get 1.3. Now, be careful. Watch what the question is asking you for. It asks you to show any cost per kilo to 3 decimal places, and any total costs to the nearest pound. Yeah. So we want to make sure that we're showing, even though it says it comes out as £1.30, we want to make sure we're showing it as 1.3000 to fit in with the required format. So I'll pop that in there. 1.300. So we can then add in our quantity and our cost onto that balance. So we started with 2,000 kilograms in stock. We're going to add, I don't know, I'm using a calculator. It's been a long Monday. We can add on what we've got in. So we started with 2,000. We bought in another 2,500. So we've now got 4,500 in stock, and it's 2,500 plus 3,250. So that comes to 5,750, I think. Yeah. Okay, if we keep working methodically, we'll start. So we've had some stock come in. We're now going to issue some stock out. Now we're using first in, first out. So we're going to use the oldest inventory first. So where is that inventory going to come from? What are we going to use if we've got the oldest inventory? Where are those 1,500 kilos going to come from? Exactly, yeah, they're going to come from here because we're using the oldest stuff first. So we will use some of that. Yep, so we're going to use not all of it, but some of it to do that. So we need to know what the cost per kilo is, and then we can work out what the total is. So how do we know the cost per kilo on that issue? What's our cost per kilo? Can we work it out? Or how do we work it out? Yeah, lovely. So what we're going to do is we're going to do 2,500, our original balance cost, divided by the number of kilos in stock, and that gives me 1.25, and I'll make sure it's 3 decimal places, 1.250, and then we can add them. We can multiply that by our 1,500, and we've got 1,875. I'm just going to note there that we've still got 500 in stock from that original balance. We had 2,000 and then we've taken 1,500 off that. So what's our balance now that we've taken those 1,500 units, kilos away? What's it going to be? So how much is what have we got in stock and what's it worth? Yeah, so we're going to do 4,500 minus the 1,500. So I think we've got 3,000 kilos in stock. What's it worth? Yeah, so we had 5,750 and we've taken 1,875 away. Yeah. What do we think? Yeah, 3,875. Yeah, 5,750 minus 1,875. Yeah, lovely. Just making sure you're agreeing with me. Okay. Right. We're now on the 19th of May and we've got, this is quite a nice one. We've got 3,000 kilos come in, valued at £1.35. What's our total for that? Yeah, lovely. So I've just done 3,000 times by £1.35, and that will give us 4,050. Yeah. And then we need to add that onto the balance that we had. So we had 3,000 units in stock, value at 3,875. We've now got another 3,000. We've got 6,000. And then we're going to add on that 4,050 to the 3,875. So I get 7,925. Yeah, happy with that. Right, final issue now. We've got another 2,000 units going out. Okay, this is where it gets a little bit more tricky because we've got to mix amounts. Yeah, lovely. So we've got 500 units left in stock from the original. Yeah, so we're going to have 500 from this stock plus 1,500 from the 7th of May. We've got 500 for the balance plus 1,500 not going to be able to fit this in from the 7th of May. I think I'll put it somewhere else. Yes, we've got 500 from the 1st of May plus 1500 from the 7th of May, because that's the next oldest. Yeah. Oh. Okay. So our 7th of May was valued at 1.3. So if we do, just take that over here and we'll do some calculating. So we had 500 units valued at the same as what we've got here, so 1.25. Oh. 625. And then we've got 1500 coming at that 1.3, because that's the next oldest. Yeah. So we're going to use the next oldest. So we'll go at 1.3. Okay, 1,500 by, oh, that's handy. It's just told me that you can now see my screen. So apologies if you couldn't for a little bit there. That's very, very bizarre. Don't know why that was. Hopefully you're back with me now. About that. Right, so there we go. So if we then add those together, so we've got 1500 plus 1950. We're going to get 3,450 for our total, the value of what we have sent out on that last one. So I'm just looking at this last one, thinking, no, that wasn't making sense. Oh, plus 625, sorry, not one. I'm picked up the wrong figure. I'm picking up the 1500. Oh dear. So that'd be 2575. Thought it was quite high. So again, we need to divide that down to get our cost per kilo. So if we divide our total by our 2,000 units, what do we get? I think for that one. Yeah, lovely. Right, this is where it gets a little bit tricky, because we've got 1.2875 as our answer. We need to go to 3 decimal places, so we need to round it up. So that 1.2875 becomes 1.288. Yeah, so just make sure you're keeping it to the right formula, the right format, sorry. And then we just need to finish off. So we had 6,000 units in stock. We're down to 4,000 now. Oh, sorry, yes, the calculation for the final one. So yeah, for that 2,000 units, we're going to use 500 from there and then 1,500 from there. So what I've said is, right, we knew when we calculated the 1,500 here, we used 1.25 per unit. So we're going to use the same again for that final 500. So 500 kilos at £1.25, which gives us 625. And then out of this lot here, I'm going to use 1,500, which together, obviously 500 and 1,500 takes us to 2,000. And then that was valued at £1.30. So I've just scribbled it all in here. Hopefully you can read it in my rubbish handwriting. So we've got 1,950 for those 1,500, 625 for the older 500. And then we add those together and that gets us 2,575 as our answer, which I've then divided by the 2,000 units to get that 1.288. Yeah. So final step is to deduct that issue, both the amount in kilos and the cost from our balance. So we had 6,000 units in stock. I'm going to take 2,000 off, gives me 4,000. And then we've got 7,925, which was our balance before, minus 2,575, which is 5,350. Yep, that's where we should end up. So you can see there's quite a lot in that, but if you think about it, each one of those boxes is a mark potentially, and if you've got 1 minute per box, a lot of those calculations will take you less than a minute to do, but some of them, like that last one with this issue on the 26th of May, will take you maybe a little bit more. But there's a lot of marks available there for filling in that box. And so you may also be asked to do an AVCO valuation on that, in which case you would need to take the average at each change in the balance to make sure that you're getting the right figures. Right, now then, part B, we've still got the same company, but we're now looking at their labour costs rather than their materials costs. So the staff, we're told that the staff work in teams and are paid a basic hourly rate of £10 per hour. Yeah, it's going to be useful. We have two different overtime rates. So we've got overtime rate 1, which is time and a quarter. So that is basically the basic rate of £10 an hour plus the premium, which is a quarter of basic pay. Yeah, so if we do 10 and a quarter would mean we divide by 4. So our basic pay, sorry, our overtime premium on that per hour is going to be £2.50. Yeah, so 10 divided by 4, because there's 4 quarters in a whole. So that would give us £2.50 per hour for the premium. So overtime premium. Yeah. The other one that you've got is time and a half. So that is basic rate plus a premium equal to half of basic pay. So again, if we look at what that premium is going to be, got £10 per hour, and I'll just divide that by 2 because it's half. So that equals £5 per hour for the premium. Yes, that's the extra bit, the nice creamy icing on the top. We're also told they get a production target each month. So a lot of information to go through on this task. So the team bonus, which is equivalent to 20% of the basic hourly rate, is payable for every equivalent unit of production. So every kind of complete unit, or when we calculate equivalent units, we get as the 100% complete. So every equivalent unit that's in excess of the target, they get 20% of the basic hourly rate. Yeah. So if we calculate that, so 20% of £10 is £2. Yeah, so we know we've got all those figures ready, and that's what I would do when you calculating on a task like this. Work out all those bits first and make a note of them on your scrap paper if you're in an exam centre, because you'll be able to use those and not have to keep calculating them at each point. It's a really good thing to do. Right, so we're then told the important bits. So they had to meet a target of 10,000 units, okay, and in May they actually produced 11,000 units, so it's going to be some bonus which is really, really good. All overtime and bonuses are included as part of the direct labour cost, so we're not having to split out overtime premiums into indirect costs. It's just all going to get lumped together in the end and go as a direct cost into our production costs. So we have to, and again, I'm hoping to get everything on the, yeah, I am going to be able to. We need to calculate the basic pay. I mean, the good thing is that they've said that the basic pay includes any basic hours for overtime. Yeah, so basically what that's saying is that the total hours that have been worked, including overtime hours, is 300. Yeah. However, out of those 300 hours, we've got 100 of them in total, 70 plus 30 that were at overtime rates of varying priciness. So out of those 300 hours, 70 were at that overtime rate of 1, which is our time and a quarter. Yep, so that's our quarter one. And then we've got 30 hours at the time and a half. Yeah. And then we need to calculate the total cost before the bonus, what the bonus was, and then everything added together. Okay, so what are we going to do? Nice easy one to start off with. What is our basic pay? Yeah, so if we've got a cost of £10 per hour, what's our total basic pay cost? Lovely. Yeah, so I've done 300 and then times by £10. 3,000. Yeah, lovely. We're all on the right lines with that. Now then, it gets a little bit more tricky now because we've now got to work out the £70 premium rate for the time and a quarter. What was our quarter bit again? That was our £2.50. Yep, so we've got 70 hours times by the £2.50, which, yeah, you're beating me to it, is £175. Final bit of overtime was at our time and a half, and we calculated the half bit as £5. So that should be, oh, putting the right answer in the calculator there, but I made that 150. 30 hours times by the £5 premium. Yep, people are with me on that one. Okay. So we've kind of finished the kind of multiplying up there for a little bit. We're then asked to calculate the total cost before any bonus. So that's just a case of adding up those three figures we've got already. So what do we get for that if we do 3,000 plus 175 plus 150? Yeah. So if there's a bit of a delay on the line, but I get 3,325 for that. Yeah, with me. Right, we now need to calculate the bonus. I'm going to just bring this down here and use this bottom space because we've got to do a bit of calculating here. So we were told that they've produced 11,000 units. Yeah. Which is really good because our target was 10,000. Yeah. So they've produced 1,000 units extra over the minimum that they needed to produce. So we said that for every additional unit, they would get a bonus equivalent to 20% of the hourly rate, which we calculated as £2. This is a good bonus. I'm just going to say that because, so for every additional unit that they produce, they're going to get £2 as a team, and they've done quite well. They've produced 1,000 extra units. Yeah. So if we multiply that by the £2 we've got here, that's going to give us a £2,000 bonus. Nice. So that's going to go into here. And then we're going to then add that together and we'll get our total cost, which I make to be 5,325, which you've got there as well. Excellent. Those are kind of the two probably quite chunky tasks. What we've got left is not as chunky, so we'll get through these in a bit quicker time, hopefully, than what we've done so far with those first two bits. Right, now then, part C is a bit more tricky. So we've got to then calculate the total direct labour cost per unit of the finished production for May. We need to give our answers to 4 decimal places. Again, on this exam, don't let all your hard work go to waste. Don't just assume it's going to be 2 decimal places. Focus on what the question's asking for, because you don't need to throw away marks through not reading the question properly. So we are told, if we remember, just go back up, we've got our total cost, including the bonus and everything, of 5,325. Oh, yep, so that's our total cost that we got from part B. And how many units did we produce? 7,000. So we're going to divide our total labour cost by our number of units and see what we get. Oh, we are put the right number in the calculator. Yeah. I'm hoping that if you do that as I've done, you'll get a massively long answer. I get 0.4840909. Yeah, so well done. Yeah, seeing these answers coming in the chat box. We've got 1.4840909. I need it to 4 decimal places, so I'll take it to 0.4840, but the next figure is a 9, so I'm going to round that 0 up to a 1. And so our answer will be 0.4840. 1, as was mentioned in the chat. Just making sure, again, the calculation for that isn't tricky, it's just making sure you pick on the right number of decimal places. But yeah, see the answers slide in now. Right, part D then, we're going to look at some equivalent units now. So we're now looking at the information that Gabriel's hoping to get for June. He's going to make some changes. So he's decided that he's going to increase the hourly rate to £10.50 per hour, so an extra 50p per hour. And they're still going to keep the target production level the same, still going to be at 10,000 units. And the bonus is still going to be 20%. However, yeah, and we're still keeping it at the equivalent units in excess of this. Okay. Now, we're told that in June, we're going to complete 9,000 units. That's 100% complete on those ones. But we're going to have another 2,000 units, which we expect to be 70% complete with regard to labour. So our team has spent 70% of the time needed on getting those 2,000 units complete. They're just not fully there yet. So we need to calculate how much of those units we can say would be 100% complete if we then multiplied it down. So how do we calculate on equivalent units? Okay, so what we need to do is we need to say what 70% of 2,000, which I would think is 1,400. Yeah. Yeah. So what we're saying is that we've got 2,000 units that are 70% complete, but that's spending the same amount of time as getting 1,400 units to be 100% complete. So we can factor these 1,400 units in to our calculations when we're thinking about what bonus should be paid. So we need to say that those are our equivalent units, or EU. Yeah. So we can say the equivalent units of production with regard to labour for June will be the 9,000 that we have 100% done, plus the 1,400 that we have kind of equivalent unit calculated as being 100% complete. Yeah. So if we add those together, we're saying that in effect the team have worked the amount of time or produced kind of, if they produced them in full, they would have produced 10,400 units. Yeah. We've still got the bonus at 10,000, over 10,000 units, and it's still 20% of basic pay. So we've got, if we look at the calculation for this, we've got 400 extra units. Yeah, because we've gone 400 units over. But we've now got a different hourly rate. So we need to calculate a new bonus. So if we look at the bonus bit, say it's still 20% of £10.50 now. Yep, so it's not going to be much more than what we had before, but it's now £2.10 rather than £2. Yep. So if we then feed that through, oh, if I can, so we'll do 400 times £2.10. Yeah, which I think is 840, but I can see that's been picked up in the answers already. Yeah. So again, a few stages to that question, but again, you get a couple of marks for that. Right, we've got a few more bits to do, but you'll be pleased to know we've got a couple of tick box questions now, and then we've got the little overtime premium question. So we'll have a look at part E. Okay, so it says identify which of the following would be the most appropriate approach to budgeting for contracting a proofreader for the final checks of the manual before it goes to print. So they're going to have to spend time reading through a manual to make sure that it's all correct. They expect it will take 20 hours, but it might depend on the quality of the work. If they've got to make a lot of changes, it might mean they take longer than that. And it might mean that if there's not a lot of changes needed, they need less time than that. So out of these four, so I'll number them. 1, 2, 3, 4. You can say in the chat which one you think. Which one is the most appropriate kind of costing method for this? Are we going to use a time-based approach per proofreading hour? We're going to use overtime per proofreading hour. We're going to look at like performance-related pay, which is like piecework. So I don't know, maybe a rate per page or something like that. Or we're going to go with output-driven. Again, that might be kind of performance-related pay is your bonus, and then your output pay is your piecework. Got that slightly in the thing. So what do we think is the most appropriate? Is it 1, 2, 3, or 4? What do we think? Yeah, I would agree. Yeah, I think it's going to be this first one, isn't it? Because we know it's going to be based on number of hours. We're told that it's going to be 20 hours that we would expect. So we're thinking we're probably going to have to pay for 20 hours worth of work. We use the time-based labour cost because it's a basic cost. This is not overtime. So that's what it's going to be. Right. Part F is going to be a little bit different. Yeah. So yeah, that's another point. It's only one manual, so we wouldn't necessarily want to be paying them per unit because, you know, it would be more appropriate to see how much time it is. I'm just going to apologise if you've got a bit of noise outside the room. Right, so the part F is identify the correct classification for insurance cost, which has been paid by a manufacturing business for its factory buildings. We've got to decide, yeah, is it going to be an indirect selling cost? Number one. Is it going to be a direct cost? Is it going to be an indirect production cost? Or an indirect administration cost? What do we think? 1, 2, 3, 4, 4. Okay, little bit of discussion about whether we've got some difference in answers. Bearing in mind that the key is in what the insurance is for. Yeah, it's for our factory buildings. It's for the part of the company where we are making the products. Yeah. So it will be a cost related to producing the units. So it makes it a production related cost. However, the insurance doesn't directly go into making those products. Yeah. So it becomes an indirect production cost. Yeah, it's production related, but it's not direct related like our, I don't know, you know, the raw materials or our direct labour is going into. So the correct answer on that one is the third one, which I think we've got to in the end. Right, last question. This is it's a bit of a monster task, this one, but lots of sort of smaller bits that kind of feed in from each other. Right, Gabriel pays a forklift truck driver in the warehouse £18 per hour, and that is for a normal working week of 40 hours. That's quite standard. Yeah. Any overtime is paid at time and a half. We'll work that out in a minute. And we're told that in the last week he worked 43 hours. Yeah. And we need to calculate just that overtime premium for what he was paid last week. Yeah. So first of all, let's calculate what our premium is. Yeah. So we're told that the normal rate of pay is £18 and the overtime is paid at time and a half. So what's our overtime bit of the time and a half? Oh, you've got me to the answer already. I'll talk it through. So if we say we're going to times that by half or 50%, we'll get £9 as our overtime premium. Yeah. We're told that he's worked 43 hours. But normally he just works 40 hours of normal time. So we'll take that off, which means he's done 3 hours extra. Yeah. And then the final step is to multiply those 3 hours extra by the £9 premium, which I can see you all got because you beat me to it, of £27, which is overtime premium. Yeah. And that is task 1 done. So there we go. Yeah, lots of little bits on that, but I hope that it's been useful. Apologies for the odd bits of tech issues that we had. Next week will be task 2. If you want to come and have a go at that, that's another quite chunky one. We'll just warn you, it's another 24 marker. But yeah, any questions, if you email us at the revision email there, and the recording will come out to you very soon, probably tomorrow.